Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermuelen from the TechnicalTraders.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
Today, as we look at the big board, lots of green, which means it's a positive market. What's your view?
Yeah, it's been a good week. We're seeing equities start to really pop and move today, and we're starting to see not only equities move up, but we're starting to see the precious metals life come to life again. They're really clawing their way back from the beating that they took back in March. And the equities market, I mean, we've been oversold. The momentum has changed to the upside. We've got a nice rally underway here. And I still think there's still some more room. I think we could see the equities market run another 7.5% to the upside going forward. But I think the upside here is fairly limited. I think there's more upside potential in different sectors like the precious metals. And I think what we're in right now with the equities is a first bear market rally in the stock market. I mean, there was a lot of things before the virus came that was pointing to, things were overdone in the equities market, and eventually we're going to get into some type of bear market. And, I think the virus was enough just to kick things into gear and actually put the brakes on for a lot of things. So overall, looking forward over the next several weeks, even potentially a few months here, I think this equities market's going to grind its way higher, slow and steady, but I think it's going to slowly roll over, and we're going to see much lower lows later this year. So it's going to be interesting to see how that unfolds over the next few weeks and months.
Are a lot of people taking the attitude, gee, I can get some pricey stock at a reasonable price right now, so I should grab it right now? Yeah,
everyone is. It's really nerve-wracking, but it's also an indicator that everyone I know is now who's not in the financial markets, they're all talking about they're buying money. They put a whole bunch of new money into the equities market. Everything is a screaming deal. And I mean, I don't really hear professionals so much saying that. I mean, depending on how you look, how they're looking at it, whether they're technicals or fundamentalists. I mean, yes, things are a better price than they were 2 months ago, a month and a half ago. But overall, things were still really lofty. And when all the people who aren't involved in the markets are piling in by the masses and all excited, that's usually like a red flag that, okay, this is a sucker's rally. This sell-off was big enough. It's done damage. We are technically, in a bear market, and this is the first bounce in it. And if this bounce can't break to new highs over the next few months, we're going way lower, and it's going to be lower prices for many months, and it could take, a year or two to get back to these levels, or potentially even longer. The last bear market took 7-8 years to get back to the recent highs. So we'll see how ugly things get in due time here. But when the masses are piling in, thinking equities are a great buy, usually it's a sucker's rally, meaning huge institutions are selling into this rally, and they're unloading their positions to the general public. And this is how the general public, they get all excited. They buy high, and then the market rolls over a few months from now, and they're sitting, at new lows, and they panic and they get out. They buy high, they sell low. This cycle has happened forever in the stock market. It always will. But this, to me, is a big sucker's rally. We're playing this upside move, don't get me wrong, but I think it's only got limited amount of move to the upside.
Well, it seems people become market experts the same way the average person has decided that they're an expert on viruses.
Exactly, I know, yeah. And the thing is, the market fell so fast. Usually what goes straight down will come almost straight back up, and that's what we're seeing here. And those who tried to pick a bottom, several weeks ago, are looking like heroes now, up 10, 20, 25%. But the problem is they don't understand position and risk management, so they're going to hold on to that play until it turns into a loser, and then until it's lost enough money that they can't take it anymore, and then they're going to sell out at a much lower price. So it's sometimes it's easy to pick a bottom like these and watch you be in the money right away and big money. But the problem is, when do you sell? How do you sell? When do you need to move on and look for, greener pastures, or take the opposite side of the trade? And that's the hard part. And that's where, everyone, gets stuck holding a portfolio full of losers, because they hold on to them until they're losers. And then they decide to cut the ties at some point.
We'll have more with Chris Vermuelen right after this.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Chris Vermuelen. Chris, is the mining sector something to look at right now?
I think the mining sector is starting to get exciting again. I mean, we've seen a really nice rally this week. I think it's going to be extremely volatile, and it's still very unpredictable, if you ask me. But overall, this is the time during a bull market, the end of a bull market in equities, the starting of a bear market. This is when gold miners and precious metals start to shine. And they got sucked down with the virus selling back in March, just simple liquidation. Everyone had pure fear and margin calls. But this is the time where they should start to stabilize, and we should see them outperform the market. And we see this almost at the top of every bull market, as we see the gold miners come to life, and they rally for 1, 2, or 3 months, while the stock market kind of grinds its way higher and forms its first bear market rally. And then eventually they will usually pull back and sell off with the broad market, simply because they get sucked down in this vacuum of panic selling and forks liquidation. But right now, the precious metal sector, I think it's going to firm up, stabilize, and I think it's going to continue to outperform equities going forward here for several weeks or potentially a couple months.
When you say precious metals sector, is that just gold, or will things like platinum, palladium, silver be involved as well?
Yeah, I'm generally talking gold, silver, and miners, but I mean the other precious metals like platinum and palladium, they can get lumped into there as well, because they are still a precious metal. But I don't follow them too closely. They do trade a little bit different, and but they should track relatively the same. Now there's an ETF called the symbol is GLTR, and it actually holds a basket of platinum, palladium, silver, and gold. And it's actually a nice stable way to get a bit of all those with one simple trade, and it actually performs very similar. It fluctuates similar to gold and silver and miners. So it is a great way to take advantage of those, because you really never know which precious metal is going to take off. I mean, everyone was expecting silver to just be the leader and to take off. And what do you know? It's gold that breaks out, and gold making new highs, and gold miners haven't gone anywhere either. And you go back on the charts, some of these other precious metals, like I think it's palladium here, just rocketing higher from 1,000 earlier, 1,000 to 1,200 early this year to 2,800. I mean, so you never know which one's going to be the hot pocket. And it's usually the one you're not interested in, that no one's paying attention to. Palladium and gold, just because gold is big and boring for speculative traders. they weren't looking at them. And of course, these ones took off in a big way. So it's an interesting way to, that's why you need a diversified portfolio when it comes to trying to play a sector.
Why the big jump in palladium? It's used in catalytic converters, but I thought auto production was down.
Yeah, I mean, I'm not sure. I mean, it was, who knows? But I mean, like, look at the sell-off from 2,800 an ounce down to 1,400 an ounce. Just amazing 50% haircut in a very short period of time. But overall, I mean, that market was just on fire. It was in a raging bull market, and I think it got to the point where everyone was chasing prices higher, just like the stock market at the beginning of this year. It just kept running and running and running. And when everybody's finally following that asset class, that's usually when the bubble bursts. And of course, the virus added so much extra downward momentum. It really, clobbered price on on almost every asset class.
We'll have more with Chris Vermuelen right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermuelen. Chris, OPEC, Russia, other countries agreed to cut oil production by 10 million barrels a day, but at a time of reduced demand. Is that enough to really help?
Yeah, I don't think it's enough. I mean, the world seems to be flooded with crude, and there was some, the rumor of that meeting coming on. We saw crude oil jump 50% in only 4 or 5 trading sessions. And then the news got delayed that there might not be a deal or there wasn't one made, and price started to fizzle out. And then the deal that got made, cutting 10 million barrels each type of deal, was just not enough to cut it. And here we are, oil's down 10% again, testing that $20 mark. And it feels like it's going to hit that lower range. I've got a lower range between $14 and $17 a barrel, at which point I think that's going to be a very significant bottom in crude. And I really hope it gets there, because that should put the bottom in, I think, long term. When you go and zoom way back out on the charts and draw your technical analysis, that 17 to 14 range is a big downside target. And obviously it's a price that's not really sustainable. So I do like it getting down to these lows. I hope it makes lower lows, because it just gives us more upside potential down the road. And I think, the energy sector stocks are actually showing signs that are leading the way and giving us hints that the energy sector is close to putting in a bottom. That's what the stocks are saying at this point.
And I guess you'd want to stick with big companies because the small ones might go under right now?
Yeah, obviously there's the amount of closures and struggling going on in the energy sector at this price is just, it's devastating. So you've got to be with the big players, and the big players are very diversified now. I mean, there are a lot of them are getting into green energy, ExxonMobil and other things like that. So, I mean, they're definitely shielding themselves to some extent, and it's got to be the big players that are diversified and that have deep pockets to hold out and stay alive during pricing like this.
Sure, I remember a few years ago, Shell spent $200 million buying a wind farm in Europe. So obviously, they're not just about oil anymore.
Yeah, exactly. Yeah, there's more to life than just oil nowadays with green electronics and tech. I mean, you definitely have to tap into that. As an energy company, I think it's critical.
Bitcoin, what's happening there?
Well, Bitcoin has been continuing to work its way higher over the last few weeks. It still is out of favor. It had a beautiful rally last year and started to fade back down for a nice big bull flag. It would look like we were primed and ready to go back up to that 2,000 mark, but it just collapsed and sold off February, March, and here we are. It's in a clear downtrend still. It's at resistance. I don't think it has much more upside to it. It's actually been moving kind of in sync with the overall equities market. So I have a feeling it might claw itself back up to the 8,000 mark, maybe a little bit beyond. Current price is $7,000. So there's still some more upside, but overall it's actually really starting to mimic what the equities markets are doing, and it is in a downtrend. So I mean, this rally should fizzle out, and there should be actually more potential downside going forward.
So, Chris, how would you sum up what's going on right now?
Well, I think if you are a long-term investor, I'd be looking at scaling out of long-term retirement positions. You can always buy back in later, but at this point, we're in a bear market rally, and a few months from now, we'll probably be trading much, much lower. As a short-term trader, this is a really strong bounce. We're taking advantage of it with the trading newsletter right now. We hit one of our first profit targets on the SP 500, pulled some money off the table, and I still think there's more room to go. So there's lots of volatility, and I think we just wait for precious metals to stabilize a little bit. They still have huge daily back-and-forth whipsaws in price. Little too volatile to stick our money in right now, but I think it's going to perform fairly well over the next 3, 4, 5 weeks. While the stock market will start to top out, I think, in a week or two.
Chris, thank you so much for chatting with us.
Hey, thanks for having me, Jim. Always a pleasure.
My guest has been Chris Vermuelen from thetechnicaltraders.com. If you have any questions for Chris or for any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.